My name is Kenyon Clark. I've been developing property now for close to 27 years.
That is Kenyon Clark, founder of the Duval Property Development Group. And this is his wife, Charlotte.
We're in a position now where we can just take what we've done and we can continue forward from where we are and continue to do what we do really well.
Together, they have been loud and proud of their achievements and their wealth, which they have claimed reached $750 million.
I'm really concerned that there are some pretty serious issues with it.
But last week, Kenyon's house was raided and all of his companies, 64 of them, were put into interim receivership by the Financial Markets Authority.
I mean, this is just this week's problems.
The news was broken by the NBR, which has been tracking this story for years. But how did it get to this point? What happens to the projects still being built? And where does this leave investors? Welcome to NBR's brand new podcast, Back in Business. I'm your host, Simon Shepherd. Our first episode features high-flying property developer, the Duval Group, run by Kenyon Clark and his wife Charlotte. The NBR has been investigating the Duval Group for several years. Here's an excerpt from the very first article quoting Kenyon Clark. It's voiced by one of our journalists.
Upon spending $1 million on a Rolls-Royce complete with Duval personalised number plate, he had this to say to the haters who derided him for being flashy. Hate is the steel that sharpens my blade. No business, no brand can survive in obscurity. So there it is, in your face, outrageous, and I f***ing love it.
Last Friday, August the 2nd, there was a major development. A tip-off came into the NBR newsroom.
The Financial Markets Authority, backed by police, took the unusual step of swooping on the Remuera home of Kenyon and Charlotte Clark. By all accounts, they had arrived by 6:30 and actually scaled the wall, scaled the fence to get into the grounds, and then presumably walked the family up at that particular time.
I'm speaking with NBR senior journalist Brent Melville, who's covered the Duval Group extensively.
We arrived probably 9 o'clock, thereabouts. At the time, there was only a little bit of visible evidence on the street that there was anybody there, and that was an FMA agent in their car sitting outside the gate. We actually buzzed the gate and surprisingly got let in. Met at the door by Kenyon Clark, who was very brief in his appearance and really just sort of indicated that we should leave by saying, you'll need to leave.
You did go back to the FMA during the day. Did they elaborate what was going on?
Yeah, they confirmed that the companies had gone into receivership or interim receivership, and they sent out a very brief release statement indicating that fact and outlining the fact that it was not limited to Duval Group or Duval Capital Partners, but actually had extended to some 64 entities and as I said, the two principals, the founders.
Right, and was it only the Clarks who were visited last week by the police, or did it extend further?
No, as it transpired, we found out that there had been multiple visits, one of them to the home and business of their lawyer, Owen Culleney. Owen is also a director of Duval Capital Partners and acts in the capacity of fund manager for two of their funds. Obviously, they wanted to secure relevant documentation under the mandate given to them by the court.
By the end of the day, 64 companies or entities in receivership and the founders. Did you go back to the founders at all? Did you go back to the Clarks? I mean, I know they told you to get off the property. Did you go back to them to see whether they had any comment?
Yes, we went back to the Clarks, as we would always do in the sort of normal course of writing a story like this. There was no reply from that end of the story.
Values of integrity and contribution are a daily choice.
So who are the Clarks and how did it get to this situation where the Financial Markets Authority applied to put them into receivership and froze their assets? As mentioned, the NBR has been reporting on the Clarks and their companies for many years.
Yeah, so Kenyon is a former bankrupt. He had what he claimed to be a $120 million business back sort of 13, 14 years ago, which collapsed in the wake of the global financial crisis. So in some senses, he's been here before.
NBR's co-editor, Hamish McNichol.
But more latterly, him and his wife Charlotte, they've built the Duval Property Group, which they have claimed at various times to be worth $750 million. Kenyon has often talked about wanting to turn it into $1 billion company, and then he'll get out and all this sort of stuff.
I can talk you through what it takes to build a $100 million or $1 billion business and property investment empire because I've done it.
Interestingly, in terms of the name Duval, Kenyon has talked publicly about how it's a family name, but he misspelt the family name. He
misspelt his own family name.
And I spelt the name D-U-V-A-L, and my auntie was one day driving up the motorway and she said you spelt it wrong. So now I'm stuck with it.
Yes, so the name the company should be called Duval, D-A-V-A-L-L, and he misspelt it as D-U-V-A-L. So I don't know, they're colourful characters, they're very present and active on social media. They have they like to portray a high-flying lifestyle. They have produced a TV show about themselves, which hasn't been picked up by any networks yet, but they're very out there, they're very brash, in your face. Kenyon's sort of quite unapologetic about that.
At work, Kenyon is like a bull in a china store.
But yeah, they've basically built this property group. Their sort of marquee or their flagship development is along the Southern Motorway in Auckland and Minako. The Lakewood Plaza, which you see as you go out there. So yeah, they've slowly built up this big property empire, but now it's sort of it's collapsing.
When did they come to the NBR's attention?
Basically, Duval at the time, they had a couple of funds. They were sort of offering 8% returns for a minimum 250k investment or 10% for a minimum 750k investment. At the time, interest rates were rock bottom, all this sort of stuff. Those sorts of returns are really quite appealing.
It was 2021, and senior journalist and then co-editor Tim Hunter remembers what prompted the very first story.
We'd been picking up concerns from the market, as you do, about the Duval business and the way it was attracting investment money. There was the use of the wholesale exemption. This is the part of the Financial Markets Conduct Act that allows investment offers to be made to what they call wholesale investors that don't require all the backup, all the disclosure and everything that you get with a retail offer.
Right.
And wholesale investors are self-certified, but they were selling it to them as if it was for retail, Facebook ads, newspaper ads, all that stuff.
So it was like retail marketing, but saying it was wholesale.
That's right. And we thought that seems a bit off. There were also structural problems with the way the funds were being set up using limited partnerships, which in my view gave the investors very little rights compared to a standard company setup.
That's when former NBR journalist Maria Slade wrote that first article. Here's another excerpt.
In the current dismally low interest rate environment, there is a clear and present danger that ordinary mums and dads, blinded by glittering returns, will be sucked into investments too rich and too risky for their blood.
Very, very quickly, we got some pushback on that from Duval. Via their lawyers, Lee Salmon Long, we got a threatening letter asking us to take down the entire column, and we didn't. No, we said, look, we don't agree with any of the assertions that it was defamatory. We're not going to take it down. We're not going to apologise. I made some minor sort of concession about one sentence in the article, and the response we got back from that was, we're going to sue you, and they did. So they sued us for defamation, and we really defended that very strongly. Our publisher, Todd Scott, was very staunch in his concern that this should not be tolerated. What it led to, though, in the medium, in the sort of short term, was there was a meeting between us and the Clarks, Kenyon and Charlotte Clark.
Right, so you got in front of them. Did they call a meeting, or did you, or was it a legal meeting?
It was something that they suggested. It was sort of structured, characterised as mediation, if you like, and So we thought, well, why not? We'll go along and talk to them and we'll see what transpires. And the meeting took place. There was myself and Maria Slade and our lawyer, Aaron Harlow, and there was Kenyon and Charlotte Clark and their lawyer, Davy Salmon KC. And Davy sat at the head of the table and made his introductions and so on. And then we had a chat, and it transpired that what the Clarks were really looking for from us was for us to take down the article, and in exchange they were going to offer us an interview, in which case, and for them to sort of talk about all the things that they wanted to talk about, and for us to ask questions and so on. And our response to that was, happy to have an interview, but we're not going to take down the article.
Right. And how did they respond to that?
The whole meeting was extremely hostile from their point of view, and occasionally abusive. And we were left in no uncertain terms that they were unhappy with us, which we kind of guessed anyway. But, when it became obvious that we were not going to back down and we were not going to remove the article, they stormed out of the meeting.
They stormed out.
Yeah.
I'm a very difficult human being to be around.
Duval was not the only property investment fund promising high returns when interest rates were at rock bottom. And as promised, the Financial Markets Authority did take a look at those funds marketing to wholesale or eligible investors.
Duval specifically got pinged by the FMA in October 2021.
Right, what did the FMA, what were they concerned about?
So they basically pinged them or warned them for misleading or deceptive conduct in the way that they were advertising their funds. So this goes back to the point of they were creating an impression of this is low risk, but they were also saying there's no fees involved in this. Both of those weren't quite true. Duval tried to appeal that decision or that warning from the FMA. They were ultimately unsuccessful in the High Court.
As well as the FMA warning, the Duval Group had some other problems. Its flagship property is the Lakewood Plaza in Manukau, South Auckland, a 17-storey residential and commercial tower block. However, a burst water main in 2021 led to significant water damage, and residents were asked to move out for 5 months. On top of that, there were ongoing disputes with the joint venture company that built the Lakewood Plaza. Then, the FMA got involved again.
Back in March 23, the FMA warned Duval again because they had written to investors in some of their funds saying we're suspending distributions, which basically means people who had invested money in these funds weren't getting any returns.
Right.
Which they can do, but there's just the way that they had communicated that. The FMA pinged them again for that. But more recently, so early 2024, we started publishing and hearing stories of subcontractors not being paid, investor groups lawyering up because they weren't getting distributions and also couldn't get their money out of these funds as well. And so basically, just for the last few months, we've heard more and more stories of this supplier is about to try and liquidate a company. This group of contractors hasn't been paid on this project. People have downed tools at this site. These investors are trying to lawyer up to get their money out. So, problems were starting to surface throughout the first few months of this year.
And was Duval having trouble securing like a big lender or a big backer?
Yeah, so for their build-to-rent fund, which is one of their sort of bigger ones, $30-odd million, the China Construction Bank, the state-owned China Construction Bank, had lent Duval $17.4 million in sort of mid-2021. But that loan was coming due earlier this year, and in the last few months, pressure really started to build in terms of was the bank going to extend that loan and keep it going or not? This week, we've learned that they've pulled that support, and they've now following the FMA action to tip all these entities into receivership. So they've been scrambling for funding and lending for the last month, and it hasn't arrived.
And at the same time, they also seem to come up with an unusual way to satisfy those grumpy investors who couldn't get any cash out or any of those promised dividends. What did they do?
Last December, it emerged that they'd restructured the entire group, and they put out an information memorandum to investors, which we obtained a copy of. And basically the idea was, we're going to convert all the debt that we have or you guys have to us, and we're going to convert that into equity in Duval. And so, that information memorandum was interesting as well, in that it sort of revealed that the group was technically insolvent at the moment, and it also had a bunch of other financial information in there. But for investors, it kind of, if you're wanting to you're not getting distributions, you wanted to try to get some money out because you'd lent money to this group. And they're now pitching this. You sort of had no choice, and so you did see a lot of conversions of debt to shares in Duval. But like I say, you couldn't pull out because you were trying to get your money anyway, and this was your best hope to sort of hold on. And
you don't know whether those shares are going to end up being worth anything.
Yeah, and they might have, but investors sort of didn't really like that idea either. That's why we get a copy of the information memorandum.
Right, so the investors were talking to NBR, were they?
Yeah, they were talking to us and other media as well, and then we had this extraordinary meeting in June where some of the Duval top brass sort of pulled in a bunch of investors and threatened them all with legal action for leaking to the media or talking to the press about the funds.
How unusual is it that your own investment, the company that you've invested in, is threatening legal action against you?
I mean, put yourself in Duval's shoes, you can kind of understand it, because I think a lot of these funds as well have sort of non-disclosure type agreements and don't talk about us. But you can also see it from the investor's perspective, because they're worried about, these are big investments. They're at least $250K that people have put into these funds. So it's a lot of money and we're talking about 120 odd investors, the FMA estimates, across the group.
My commitment is to ensure that this series equips you with the knowledge and the tools to start building a property investment portfolio over time and to create genuine financial resilience for your family. So, let's get started.
So now the Duval Group and associated entities are in interim receivership. The FMA has issued asset preservation orders and says there are about 120 affected investors. Some of those investors were already planning their own legal action to get their money back.
We represent 16 investors. They are all investors in what was called the Duval Mortgage Fund.
This is barrister Jeremy Johnson.
These investors are, they're just New Zealanders from a variety of backgrounds, but largely people who, you wouldn't describe as sophisticated investors. Lots of people have put all of their life savings into this, a surprisingly large number. And certainly one person who's not part of our group, but I'm aware of one investor who had sold her house and ultimately put that amount of money in as a sort of temporary holding pattern for her. So, we're seeing a lot of ordinary people really taking a hit from this.
And what sort of money are we talking about? Was there a minimum amount to qualify to get into these funds?
Not really, no. So the amounts vary between investors. We've seen people as low as about $100,000 to people who've put in more than $1 million.
This FMA case seems to revolve around whether these investors have been marketed to as wholesale or eligible investors, but in a retail way. Do the people that you represent fit that sort of category of wholesale or eligible?
I would be surprised, in all honesty, and certainly the evidence that we've seen suggests that that test wasn't properly assessed at the time, and it probably wasn't properly administered. So, we have one client who's acting for her elderly mother, who went to the Duval offices, was then taken to a lawyer next door by Duval, made to sign the wholesale investor certificate, and then she was taken to the bank by the Duval person to make sure she had the funds ready to pay over.
So they escorted her throughout the whole process?
Correct, which is not, you wouldn't describe that as usual conduct. So there's a whole lot of stories like that are coming to us from these investors. But the reality is, to be a wholesale investor, you have to either have large sums invested yourself or basically be quite sophisticated such that you can assess the risk. And it's clear, talking to these people, that they wouldn't fit within those categories.
Embrace the idea of deprogramming and moving beyond the limitations of traditional education and societal expectations.
You talk about the way that they were sort of brought into the fund. Some of them wanted to buy an apartment and ended up being convinced to invest in the fund. Were they responding to like retail marketing, like social media ads, those kinds of things?
Yeah, some did respond to that sort of marketing. A lot of it came in through Duval would run property seminars, how to become property investors, how to buy a first home, that sort of thing. And people often came in through that sort of arrangement as well. So, and the ads were, if you look at the material that we've seen for the mortgage fund, you've got a big page that says 10% in bold. They were selling an attractive proposition. So you can see why people responded. But the reality is, what they were investing in wasn't built home or anything like that. It was a development entity, and development entities are risky. And the live question for us and for the FMA, no doubt, will also be, were the risks of that actually properly described in all the information that was sent to the investors?
So the FMA's moved. They've tipped 64 entities and companies into receivership or interim receivership. What does that mean for your possible group action?
Yeah, good question. We were on the verge of filing an application to liquidate the mortgage fund separately, which has ultimately got loans out to various Duval development entities, typically as second or in one case the fourth mortgagee. So not a great security position.
No.
What we are expecting, so the receivers have been appointed by the FMA for the purposes of investigating and maintaining assets. So as we understand it, by the end of next week, although it seems a Herculean effort, so if they pull it off, well done to them.
Very short time frame.
Very short time frame. If the receivers are meant to report to the court by the end of next week, and we are hoping that will actually give us some information. Because one thing our investors have never really had is proper information. So it's only been in recent times, after many, many questions from us and from our investors, that we received copies of the financial reports for the mortgage fund.
Right.
But what we don't know is when this report says, well, we've loaned $20 million to a particular development, we've got no information about that development. You don't know who's ahead of you, you don't know how much they're owed, and you don't know whether you're going to be recovering that $20 million. Now, based on what we do sort of publicly know, we suspect you're not. Because there's a pretty aggressive first mortgagee who's also owed a lot of money, we think, and a very high interest rate. But that's the sort of information that we hope will come out as the receivers report.
Can your clients have any hope of getting any money back?
Very unclear at this stage, because there will likely be questions around where the money went to and whether it's gone into other entities, where there are other creditors, and then you ultimately have a kind of priority stoush between various people.
And where do your clients sit on that priority list of creditors?
That will depend on the particular circumstances. If you're unsecured, then you're probably behind the other creditors. But it will depend as well on the knowledge of various people involved. And one thing we will be actively looking at, obviously, is questions of what's the role of the directors in this. They had obligations under the FMCA when they came to us. If the risks weren't properly disclosed to us, or if information wasn't properly disclosed to the investors, then there may well be an action in relation to that. And obviously there's going to be some risks for the directors around how they have traded these companies. If they have breached either 135 or 136 of the Companies Act, reckless trading, incurring obligations without a reasonable basis to think you can pay the money back, action will likely follow, so long as it looks like there might be some actual recovery at the end for investors.
But in the short term, all eyes will be on the report that the receivers bring back.
Correct.
So, as Jeremy Johnson said, it's up to the receivers from PwC and what they find pouring through the Duval Group financials. Let's go back to senior NBR journalist Brent Melville.
At this point, they're dealing with investors. They're talking to more than anybody who has a claim against any of these companies, any of these entities, under whatever guise. They're putting together as robust a financial story as they possibly can, and they will report back.
What about the founders, Kenyon and Charlotte Clark? What happens to them and their finances through this process, given the law cited in the court orders specifically includes the potential for prosecution?
At the moment, they are in receivership in a similar position to their companies. There would be a significant financial impact on not only their businesses, but also in them in their personal capacity going forward. There has been some speculation of criminal charges that we've heard about. Nothing's been levied yet.
We don't have any charges as yet, though.
We don't have any criminal charges that we're aware of. But look, this could come out in the wash. I mean, we haven't yet seen the court papers. But as far as their future, it's difficult to speculate at this point.
And that wraps up our first episode of NBR's Back in Business podcast. You can rest assured the NBR will keep across this story. Links to all the audio clips used are listed in the description. And for more on Duval and other comprehensive business coverage, you can subscribe at nbr.co.nz. Thanks to Creative Director Michael Hitmott and Content Producer Joseph Hisayasu. The Back in Business podcast drops every Tuesday and Thursday. I'm Simon Shepherd. We'll catch you then.